All right, so watch how this gap here holds. We also have an order block next to it right here. So that's 2 PD arrays already. And you can also look at this inversion gap as the third one. So preferably you don't actually trade above this order block at all. We do have a tiny gap here that was mostly filled. We don't have candle buys within it, but just watch that little range in there. Tapping into it. Mark this inversion gap over. So watch how from this purple line to this 1 hour gap, we should see some pretty quick movement. I don't want to see something like this, a high resistance liquidity run. It's going to be quick expansion that's preferred. Like even like this is pretty quick. I want to see few order blocks form, few retracement legs. Just a nice move down. 1 hour charts basically look the same. ES's 1 hour gap that's basically replicated from the, what is this? The 9 a.m. candle is slightly lower. So if I send a screenshot over here, there's the 2 hourly charts, NQ on the left, ES on the right. So just kind of watch how, if we want to reverse, look at that SMT as well. So it came up, filled this entire gap, tapped into the order block. And we're still waiting about 2 minutes here for the macro. Yes, definitely bearish. So that gives us some confluence for NQ to continue. So we have a gap here. Obviously, it's still further downside targets on ES. I'm not going to mark them out, but I just use that. DXY should be trading higher. You want to see these. This 2 minute gap here hold. And then we continue to trade up. I'm going to mark out some of these buy stops just to make sure. And filled it perfectly, tapping the order block, and we're trading lower.
Order filled.
See, right around 942, we did take short-term internal range liquidity. But now just watch for expansion lower. So here's the macro time. Make sure ES should be selling off from their gap. DXY, I still want to see it continue up of the relative equal highs there and all the way for preferably the 7 a.m. high. So here's the macro time. Watch this up closing range as well. So these two up closing candles, if we can close below them, preferably all the way below the wick, that should be a high probability order block since we're filling a gap. So when we're filling a gap and we form an order block on top of it and we close past that order block, this because for a bullish or bearish example, that order block most times will be respected since it's a balanced price range that's laying on top of it, and it's the order block. So that's already 2 PD arrays that you don't want to see violated in a move, continuation move.
Order submitted.
So closing below the IFEG. Yes, filled up all the way, buying and selling. Do a tiny volume imbalance up here. I assume it's going to be left open, at least for the short term. I mean, obviously there's sell side down here. we're looking to target if you want to see downside movement. We're still kind of just chopping around here, and I don't like that. Preferably you want to see it close below, like just one nice down candle that shows some displacement lower past below true open. Now with reversal happening prior to 10 o'clock, in that first 30 minutes, we're expecting a retracement entry to happen around 10 o'clock. So 10 o'clock can either retrace or reverse. Now this kind of down closing candle is nice. We want to see another one close all the way below, preferably this wick in here.
Order filled. Order submitted.
So watch how this IPG holds. Let's look at ES. So there's your bottom bounce filled.
Order filled.
And trading up further into the gap. So definitely not as clean as I'd like to see. All the way up to the buy side there. The premium men, sorry. But it's just chopping around. Or I would say wait for 10 o'clock unless we just filled it all the way. Let me remove some of this stuff. Just filled the sibi all the way with buying and selling. So unless we get a clean reaction all the way lower, I would just wait for around 10 a.m. or after 10 a.m. for silver bullet hour. Don't have any news today. This orange folder. That's about it. It's trading all the way up into premium there. Tapping into their order block. DXY slowly moving up too. You can see the 15-minute chart, the candles are still closing pretty bearishly. Right? Like they're all filling up higher and then closing below 50% of this entire gap here. So that is a very bearish sign. So we filled this all the way. I expect speed now all the way to the short-term sell side. Let me screenshot this really quickly. Send it to predictions chat. DXY moving up now.
Order filled. Order submitted. Order submitted. Order submitted.
So we'd like to see, as long as DXY continue to pops up, this continue. I'm still favoring the downside here. I would find it weird that, especially after making this edge jagged, we leave all these relative equal lows down here untapped. Lot of chop back and forth. There's really nothing I can say to read this. Just trading back and forth, back and forth. We want displacement. So whenever you see this kind of range-bound movement, you typically just want to see displacement out of it. And then once you see displacement, we're going to be waiting for how order blocks hold. So to confirm the expansion move, right? So This can happen when we're bouncing between two PD arrays. We have buy side and sell side swept. We're at 50% of a dealing range. All those play into price potentially just bouncing back and forth. Now it's hard sometimes to identify it. I would say get off the 1 minute. Most times the 3 to the 5 minute, if you're looking intraday, it's pretty clear that we're going to be range bound. Like 5 minutes, obvious. But the 1 minute sometimes becomes difficult because you can be reading each candle and not seeing exactly what's going on.
Order filled.
And trading above here. So if we close above this sibi, then look for the buy side I've marked out. Oh, I don't have it marked out. Buy side up here on the 15-minute chart. As well as the 50% of the RTH gap and the full RTH gaps all the way above London high. There's a tiny range in here that's not filled all the way. Yeah, still chopping around here. You can see this portion does not have any candle bodies within it, right? So wick, still unfilled. I'm cycling back and forth between ES and NQ here. Partially because we did get this sweep right here with the PM low. Now you can see that as a Judas. And we do have substantial SMT between these lows, between ES and NQ. Let's see if we look, whoops, right here. Pretty substantial SMT. Let me type this up in predictions really quickly. If it closes above that sibi, look for it to be used as inversion. So we're flipping bias here, looking at the SPY side now.
Order filled.
Yeah, starting to expand. So look at this now, this section here, as your Judas swing below sell stops. This is your accumulation, manipulation, distribution needs to be above the 930 open. Here's your 930 open right here. So 930 open right here when you see distribution above it. So preferably above this AM high. Buy stops resting here. And then we also obviously have more all within this range, but you can kind of see the market maker buy model now forming. I'm gonna send this picture to predictions as well. It's the ES chart. So if you go back to NQ, this inversion should hold, right? Buy side up here.
Order submitted.
Trading back into the IFVG. We don't have any order blocks that forms on top of the IFVG. So if you watch the inversion for value gap video, how to read them, you're going to be looking for the order blocks that form within that range as it closes it. As you know, as kind of an entry point. We do have a gap here this small bisi that we just filled that layers on top of the IFEG. YMNQ doing their own things. Yeah, it's definitely difficult to read those two, but ES looks way cleaner to me. We have a breaker that's forming. We have this bisi on top of it, right? So if we go to maybe a higher time frame, it's still choppy. This would be the breaker I'm looking at. So these last up closing candles for the move down that takes stops, external range breaker there. Go back to NQ. Still within macro time. We got a retracement here at 10:01. I'd feel comfortable going long here, just as a demo. Trailing stop right at this sibi premium end. It's balanced, so probably don't want to see a trade back, especially with ES on the breaker, bisi, and we have inversion gaps in here. All should hold price. We'll do take profit above, right at that buy side. More than 20 points, but I feel comfortable with that expansion, especially as we have the RTH gap 50% still above us. So most times when we're looking at an RTH gap expansion,
Order submitted.
it's going to reach, if it wants to be filled, right? We're going to be looking at for it to reach the 50% mark. Obviously, it may come and close all the way up to the high end, but it's still very good. You're going to see consequent encroachment of that gap being used, just like how you see it used with the other gaps. So new week opening gap, bisis, sibis, even large liquidity voids, something like a new day opening gap, or even volume imbalances. You all want to see hold to some extent at 50%, since there's going to be, or even the gradient, you can use 25, 75% too. But 50% is that kind of that main one you're going to see. And that's the level you're going to be looking at to gauge strength and weakness too, right? Like if we have a gap and we're closing bearishly, like we saw here originally, that would be a good indication that we want to move lower. Obviously, if we're closing above 50%, above 100%, like in this example, that's another good, that's a bullish indication we want to continue. So like in here, you can see with these fair value gaps, with the inversion, all these candle buys are closing above it for the most part. There's obviously wicks down that balance the price range, but the bodies are all staying pretty bullish there. So first target would be the AM high. If we're looking at it, even 830. If you want to use the 830 open, we're right around here. Move this. 830 opens right here. So right, still we got true open. Best shorts, or sorry, best longs happen below 930 and 830. But if you want to extend this 830 price out too, you want to see expansion above 830, a bullish day. Let's take a look at ES, filling all the way down to their order block. I do preferably want to see expansion now, especially since we closed above the breaker. If we don't get expansion here the next 6 minutes or so up to this high, preferably this high is taken by the macro end. Looks like we might get stopped out here. Watch this last gap. That should support price.
Order filled.
And expanding all the way lower. So stopped out on that one. We're not getting any movement in our direction today. I'll send the screenshot to you, futures trades. Keep it transparent, and DXY is not trading back up. Let's take a look at ES. ES took out short-term buy side and trading back lower. So you can see how poor today is, right? No real Judas forming, no clean price action. If you look at NQ, it's very obvious we don't have clean price action. Trading back and forth, back and forth. I remove these gaps. None of them being respected. True open. We're not seeing Judas swing. Actually, I'm gonna leave the true open on. Take these execution labels off. So with breakers that layer on top of her value gaps, like you saw on ES, we're looking at this one right here. Well, especially when we close above the breaker like this is your unicorn setup long. So this is kind of your golden setup that ICT has spoken about in the 2023 mentorship and his content there. But a lot of times you want to see it react very, very quickly off of a gap that layers on top of the breaker. Preferably the entire gap is not even closed in. So if you just saw a wick into the premium end and then we fly off of it, that's your optimal entry. But this kind of like after this candle closed here, this candle closing all the way below the breaker again, that invalidates the whole idea, for me at least, where we have a breaker and inversion gap that once we close above, if you're familiar with the old buying, old selling concept, I think I have another video on that, but if you're looking at a market maker model and we have inversion gaps on the other side, inversion order blocks on the other side, once we close below them, preferably you don't want to see a candle body that's placed back above that range. So if you look at inversion at the same way, where that's old buying, once we close above, you don't want to see a candle body that closes back inside that range, right? So if you look at the 3 minute, what do you mark it on the 5? Yeah, 5 minute. Closed above here. So preferably this wick just comes down, taps into it maybe once or twice, and then we fly up. You can see we're still respecting a bearish PD array right here. And we're just stuck in between two gaps, and buy side and sell side. I still think that this is right outside macro time, but I still think that this short was very, very clean. And I think I would take that still any time of the day. So we traded back into discount here, tapped into the order block. Oops, order block here. So it looks like we just got barely stopped out there. And flying up back towards the buy side. Yeah, definitely a chop session. I agree. So this down closing range now should hold as an order block too. Should be a repulsion block, so you don't want to see mean threshold of that hit. And we fly up past the target, of course.
Order filled. Order submitted.
And we reach towards the buy side here with tiny gap we're respecting. But I'd still look for RTH gap.
Order filled. Order submitted.
Yeah, 50% is right at what? 16,731.
Order submitted.
And then you have the London high up at all the way up there. Pretty far, to be honest.
Order submitted.
And now we should take buy side. I see this last pump up.
Order filled.
There you go. And shoving up into the RTH gap. Ah,
Order filled.
frustrating stuff. There's your RTH gap, 50%. So if you look at the execution label, we got stopped out right there, right in the order block, and then it flies up all the way to take profit. That's just frustrating, but I guess that's part of the game, right? I mean, I'll send a screenshot of this. I'll send this full screenshot actually to Future Trades now, so I don't look as dumb. And is right at the macro end too. 1010 we pierce liquidity. I told you I want to see that buy side up to 1010, right? Damn, that's annoying. But I mean, I guess the framework is there, right? I hope you still understand that this was a nice setup. We failed to displace lower. we had the SMT, bullish SMT down here. We closed above the breaker. I'm gonna look at ES now. Like, what the heck is this? This is so poor price action. I hope you. So I told you I wanted to see that respect off this, but we dipped so far into discount here. This should not happen. OTE, yeah, but typically you don't want to see OTE of a range hit like this in this scenario. Obviously, there's times where you want to see retracement, but like look how we formed this sell side. Traded up into here. I mean, the most you'd want to see is maybe this order block hold because you're disrespecting 3 PD rates on the way down. And obviously we're going to see this expansion now up to the buy side, but NQ here. Framework was right. We closed above this inversion gap here, which was my entry. And we had this gap. My stop was below this gap right here, like right at the discount end. Tapped in the order block and it flew. I guess if we did a 1-to-1 trade, it would have played out, but got a stop loss at 16,685.25. Yeah, that's tough. This low, I assume this 957 low. ES smooth, near-term highs, SMT, 830 above made it. Big range yesterday. Yeah, all that stuff combined. Low probability. I mean, that's why I said I wanted to see opening range play out. So I guess I kind of baited myself on that one. If you look at the daily bias post, so I just wanted to wait first opening range to gauge where market is expected to go rest of the AM session. So obviously if you waited between here and here, 10 a.m., you can see it's pretty clear, dipping into the order block and fly off that. But just barely missed the... I wanted to see this, like if you take this execution label off, I wanted to see this used as the retracement because we're expecting retracement reversal at 10. So I thought that this, just a minute off, this retracement leg was going to be the perfect into that gap, into the inversion, and then we continue. But it just off by, 7 minutes or so. You can see right past that buy side, tapping into the 50% level, and we're getting respect off of it. So this is why you want to have these marked out. I'll send the screenshot to predictions chat as well. ES also should be reaching up for this high. That would complete the market maker model I'm looking at. Still a lot of liquidity up here too. Just don't know if we'll get a retracement off that before. Can see we don't have any gaps here on the 1 minute chart. Don't have any gaps here on the 15-minute chart, tiny one, but it just looks like this is random bouncing. So whenever you have, I'm going to keep saying this because whenever you have that, a lot of times sometimes price can come up, fill it, and then reject off. And you're not going to understand why. So we're filling further up into the buy side as we expected. So look for RTH gap high. Look for London high as well. We'll mark out the buy side here. We have a tiny gap on the 15. We should annotate that as well. Should cause some resistance or a possible short-term retracement. Nowhere to get in now. Yeah, I'd be waiting for 10:30, 10:45. We could see retracement off that. If we look at ES, we still see the Judas form. 930 true open. And I guess we have, I remove some of this stuff. We do have an entry point below true open for the best possible range. Now, since 930 created a Judas swing, I would expect 1030 and that opening range model. So between 1030 and 12, you want to see a run on either AM high or AM low. I'm not expecting this low to be taken during the AM session, at least on ES, if you look at ES. Whenever we see that liquidity sweep, the Judas swing form, most likely this will not be returned to. But the fact that it wasn't a clean sweep and NQ has relative equal lows with SMT means, you know, we could actually return back into this. And we haven't even tapped 50% of the range. All right, we still have this larger 1 hour gap. Hope so. Not happy with my performance last 2 days. I mean, with the markets these past 2 days is just not optimal. Like yesterday, if you didn't get anything in yesterday, I feel like that's perfectly fine. Or if you took a loss and just stopped there. But the hardest thing sometimes for ICT trading is identifying when it's low probability when you don't have something to tell you beforehand, right? Like if you had like search and destroy conditions, or if you had a large overnight move, any of those like textbook low probability days that are indication to you, then you're like, okay, I'm expecting low probability stuff. You know, we're just gonna stay safe, play it smart. On a day like today where we have no red folder news and that's about it, didn't see a large overnight move. We have both draws on buy side and sell side. So it becomes difficult to see sometimes when price action is poor. Like here, if we were to go back, I still think that is a good short. Right, we have sell side, we have the 1 hour gap below us. The only thing we're missing is a real purge at 930. We did take some buy stops, and we had SMT, but I mean, we're trading back lower, displacement, fair value gap, and sell side below. I still think that is a good short. And obviously you can tell how it plays out where, oops, where we don't get it. And then you can see maybe the long opportunity I went long on. Long there, stopped out, and then it flies. So these are the days where it's going to be very, very frustrating, and it's going to test your discipline and patience a lot. Partially because you may not understand why you're wrong, which is I think that's the most frustrating thing that can cause emotional trading, right? Like if you took a short or something like, you know, a long or a short, and it's a market maker model, and then say, you know, we started trading back lower here, took out short-term low, and you entered short right here. Stop was maybe here. We had a fair value gap up here. That price then comes to fill, trades into it, stops you out, and then trades back lower. In this example, you understand why you're wrong. At least I would, right? We traded into discount, potentially took out short-term low, traded back into premium of the dealing range, into a fair value gap. I just entered too early, and we got stopped out, right? Like that's kind of like something you can journal and understand later. The hard ones are things like this where the framework is right. We have, you know, shorting opportunity here, didn't play out. Long opportunity here where we have 3 PD arrays that should support price. We have inversion fair value gap we closed above. We have this gap right here we closed above. We had multiple wicks into the gap and closed above it. And we had this gap lower. That should all support price. Instead, price comes down into discount of this dealing range. I want to use this or even just this current price swing. Into discount there, staying within OTE into the order block, disrespecting the repeat arrays on the way down, and then shooting off. It's like that for me, I feel like execution was right. Stop loss may have been a little too tight there, but I felt comfortable putting the stop loss there because if price was to disrespect the repeat arrays after taking buy side like this, I wouldn't want to be in the trade. So that's where a lot of like emotional control is needed, where you just become frustrated with price when it doesn't do what you want it to expect or what you're expecting, and then maybe it plays out, or maybe it just reverses. You flip positions and then reverses again, and it just is very, very annoying. I think. Tiny gap up here, we're filling this gap as well. I'm gonna try and extend this out. Right there. So, I mean, these days are the ones you want to be journaling too. Even if you didn't follow your rules, obviously there's always a time when you can stop. So, but I mean, to journal these kind of days, I would say, um, it's a low probability day. Wasn't expecting it. Got chopped up in the marketplace. Here's what I did wrong. Execution wise, here's maybe what I did wrong emotionally, and then here's what I can fix in the future. And I was speaking about yesterday is there's always this kind of decision. There's one decision where maybe you take a loss or you're red, and you subconsciously or consciously make a decision. Okay, am I going to revenge trade or FOMO trade so I can get back the drawdown, right? It's just going to be one little decision you have to make, and identifying that decision. The answer is always going to be no. I mean, you might think the answer is yes, where you're like, all right, um, if I just click the button one more time, increase my position size after I get stopped out, we can ride this all the way back up. But most times, I'm sure people can speak from experience, whenever you get into that mode, you blow your account or you blow your evaluation, right? And then you go back and do it again. And you're like, why did I just do that? I just reset my account 3 days ago. And here I am doing the same exact thing where I took a loss, didn't feel like it was justified, and I'm trying to revenge trade and I blew up my evaluation account again. It's like, but you have to understand that there's always going to be a trigger and there's always going to be a reaction that you're doing either subconsciously or consciously that forms into that pattern of you over trading or over leveraging. So maybe that trigger for you is um, something like this, where you get stopped out and then it runs aggressively and you want to re-enter as soon as you see that price trades back into your favor. But when you're thinking like that, you're not really looking at price action. You're more of just trading the P&L. Okay, so maybe the trigger for you is you take 2 losses, right? So as soon as you take 2 losses, you know you're going to go into a emotional state. So you say, okay, as soon as I take 2 losses, no matter what, even if price action looks good, I'm going to cut it off because there's always a tomorrow where price action is going to be better. Maybe for you, it could be the other way. It could be you take a 2R trade or a 3R trade and it doubles your daily profit target. Say your profit target is $100. You get a trade that goes $200 in profit and you take profit there. Maybe that trigger for you is greed instead of, man, I'm already up twice my daily goal. Let me keep pushing it. And then you end up going red on the day. Like, why did I do that? So you have to identify the triggers, first of all, then identify what your response is to it. And then as soon as you kind of identify that response and you get into that self-aware mode where you're like, all right, I know I'm going to do something stupid here. Let me just turn off the charts. Let me just go take a walk for 5 minutes. Let me pull up, I don't know, Wordle for 5 minutes. Let me just get my mind off trading. So then all that, that adrenaline and cortisol wears off, if you want the science behind it. I did do a Twitter space on all that. So if you want to watch a 3-hour Twitter space or 2-hour Twitter space, whatever it is, I'll see if I can find the link and post it in here somewhere. It is all posted on Spotify. So if you're new here and you haven't seen that, I'll send the link really quickly, and then we'll get back into the price action. But super nice because then you can just put on 1.25 speed and just listen to him. I think this guy's posted every single Twitter space that he has. So there's the link I posted right in prophecy chat. That's to the recent one. But if you click on, his name is Drunk Monkey. If you click on his little user profile, you can scroll down. There's probably like 40 or 50 different Twitter spaces from this year the ICT has done. I think those are very valuable. So if you're struggling with the psychology part of it, even just want more clarification into how to be a better trader, those Twitter spaces are great resources. How do you trade the barcode and consolidation ranges? On lower time frames, I would say you don't. On higher time frames, when we are consolidating or barcoding, like on the 15-minute chart, even the hourly chart, scalping is really going to be the only way I would look at it. So 20-point partials, 20-point stop loss. If I'm wrong, I'm wrong. If I'm right, I'm right. And then I get out. Preferably just one trade during those consolidation ranges. And something like today, where we don't have a clear drawn liquidity going into 9:30, it's probably best to wait for the first 30 minutes. You let price do whatever it's doing. Sometimes as well, indices are misaligned, like we saw this morning. Like if you look at 9:30 right here, you can see ES chopping around and Q pumped up and YM dumped off all at that same time, right? Sometimes this is also what happens during 10 a.m. news drivers. So if you have 10 a.m. news driver and there's no 8:30, so just a 10 a.m. news, sometimes you'll see chop for the first 30 minutes. 10 a.m. news brings volatility as well as indices and DXY become more aligned. And then that silver bullet hour that follows should be pretty clean. If we have 8:30 news and 10 a.m. news, most likely one is going to sweep stops and then one is going to distribute. And it's most likely going to be 8:30 sweep stops, 10 a.m. distributes. So if we see a buy side sweep at 8:30, you can expect 10 a.m. as long as liquidity is not met. 10 a.m. to bring about the sell side run. If sell side is met at 8:30, we have 10 a.m. news. Drawn liquidity not met, buy stop run. I think that's what we got on Friday too. Go back to Friday. If you were here on the stream, you know exactly what I'm talking about, where we had 8:30 news sweeping out sell stops, and then we had drawn liquidity yesterday PM high, as well as maybe another buy side liquidity pull. Yeah, up here. Also equal highs we just didn't reach, but I don't know if I entered a demo long here on stream, but it's telling you this 10 a.m. news driver should expand towards the untapped drawn liquidity. So we're not going to see 10 a.m. news ever be. Most times it's not going to be manipulation like this. Say this is manipulating sell side and then reverse. Most times you're not going to get that unless price is already met liquidity. Then you could see a reversal. But most times you're not going to see this. It's either going to be distribution towards liquidity or reversal 10 a.m. news. But yeah, when it's just 10 a.m. news, then you'll see price action do something like this. So trading consolidation ranges, preferably you don't. So, and then I would say flip to something like a 5-minute or a 3-minute. Get off the 1 minute for sure. If you go to a 5-minute, it becomes a little bit clearer. 3-minute. And here, like we're chopping back and forth. We finally see consecutive green candles close above this order block. Then it makes more sense, right? Like we clear this out. Order block on the 3. Lines up with this fair value gap. Hindsight, a little bit clearer. Could have used that as our entry instead. But order block fair value gap, stop below, maybe the fair value gap below if you wanted to. 954 candle. Take that long, and then boom. Also within silver bullet hour. Trades up. So I assume, here's 10:30. I assume we're going to continue up. ES tap into their order block range here. And we left buy side up here still. So I feel like 10:30 macro should continue us, at least up into that sibi. I'll send that to your predictions chat really quickly. It is hard to tell though. I'm not gonna lie. The only reason I'm just watching and being careful is because these relative equal lows. I don't want this to be the reversal at 1020. We see a continuation pyramid, or sorry, market maker model here, right? So let's just watch and see. I think since it's 50-50 and it's not clear, I'm not going to take another demo on it. But think of all the framework we have: buy side sweep, RTH gap halfway filled. You can see we're starting to respect this sibi now. And we had a reversal at 1020. This is not really a profile you'd like to see. Like if we look between 9:30 and what 10:30, this is not super high probability. I would say if you look at the 5-minute though, gap in here. We also have the 5-minute breaker. Actually curious if we take the time fib here. Entry, of course. 2 to 2.5 on this range. Up towards the buy side. So gap in here, order block as well. And the breaker. So I don't really like shorting into 5-minute strength. Buy side is taking over 1 minute for value gap. Don't you think it'll go down? So I can't tell. The reason I'm not shorting this is because I can't tell if it's just retracing into discount right here. If you look at this, it could be retracing into discount like it just did, right? We have a gap, the 5-minute strength, or if it's going to continue all the way to the relative equal lows, right? So if we were to short right there, I mean, you may be able to capture 20 points, but 15-minute unicorn, yeah. See, this is what you want to see. Perfect. Thank you for that. Low, high, lower, low for value gap, and we wicked into it like that. So that right there is typically a good sign that price wants to continue expanding. So watch now how we may close above here. We just dipped into discount. We'd like to see a closure above this gap. You know what? Should we put another demo on? I think we'll do it. Stop loss to low. Take profit up at the sibi. We'll do 20 points. We'll just do it for fun. 15-minute unicorn plus 1-minute retracement to discount and the 5-minute bullish order flow all holding. This is a very messy chart. I apologize. Keep the true open. Hopefully that's good. So about a 1-to-1 with this kind of quick down move, acceleration up, 15-minute unicorn. All that kind of in context. We're also within macro time. So preferably you do want to see expansion up. I'm going to mark out, let's look at ES too. ES also filling, the order block holding it for the most part. We also want to see how this candle here is potentially used as an order block. And then buy side, I'm actually going to put an alarm up here. So kind of an advanced topic is if there's obvious liquidity, like see how on ES there's obvious liquidity there that we're reaching for. NQ not as much. We're just kind of trading up into a gap here. What you can do is obviously you could be targeting this gap. Or sometimes what I'll rarely do this, but if ES has a target, I'll wait for that target to be met on ES and then close out my position on NQ. Obviously, or you could just be smart and just trade ES. But if you're trading something like this and you're just kind of waiting, okay, I don't know where to take profit. High makes sense here, right? That's a nice take profit zone, plus 20 points. Maybe the sibi. I would say this is a little far. We don't know if it's going to extend all the way past that. But you could just wait for that alarm to go off and then take profit there. And you can see we're filling this buying and selling. Once we close above it, should be held as inversion. And then we don't really have any gaps. We see a tiny gap there, but above that, efficient price delivery. Could see speed up to that high, which is where we're going to take profit. Nice acceleration up. I'm going to send this screenshot to predictions chat as well. So that's why I would not short that. Makes sense? Like, obviously, we did take out buy side. We did have that sibi. We'd have a market structure shift, but the framework is still important. We're not going to take that short because we have discount. We have higher time frame structure that's pointing towards further upside. And look at this 15-minute chart too. Oh, once this gets filled out, if we get filled out here, I'll take your attention to the 15-minute chart, and you can see exactly what a unicorn setup that we're looking for on ES prior actually looks like. So we have a tiny gap here. We're going to see a retracement, or just kind of a slowdown, speed bump in price. And then after that, after we close above it, I want to see speed. I still think this sibi up here should be hit. But I just want to take the 20 and get out.
Order submitted.
Like I said before too, with so watch how this now should be used as inversion. With a 930 Judah swing, we most likely won't see the 930 attacked for the opening range model. And like we're seeing right now, we're going to see continuation through AM high. So now I want to see speed, at least up to this high here. Probably can remove this, right? This inversion should hold. Tapping into it there. You can also see the miniature breaker, internal range breaker in here. Low, high, lower, low. Tapped it there. That would be your old buying on this side. Tiny bisi here too. Tiny, tiny one. I don't know if you can see it. Now I'd like to see speed. We have balanced most of these, both buying and selling. There's really no reason to return lower. Let's take a look at ES really quick. ES struggling to fill this gap. We have some SMT there, but once we shoot above this high, look for speed, even above this high right here. And accelerating up, let's go back to NQ. Balanced price range. I'm going to move this stop to break even now. And we accelerate up. There's your 20 points. Done and dusted. So look for this gap too, but I'll send the screenshot as well. And you can see you're starting to get a little retracement off that, but there is your 1030 win. I'll take this off really quick and then we can look at the full thing. Talk about the 15-minute unicorn. Where's Michael Jackson at? I will just do DJ Khaled. That one's better. All right, so going back to ES. So just assume we're gonna continue to climb here. Look for this gap. I'll put an alarm actually so we don't miss it. Hello? There we go. All right. ES, unicorn setup here. I told you just want to see this gap filled, right? Especially when we close above the breaker. Closed above it, tapping into a gap that lines up with the breaker, right? So that's two PD arrays lined up on top of each other. You just want to see a wick. Maybe this kind of candle is fine too. And then expansion aggressively to buy side liquidity targets. This dip lower is not what you want to see on a true unicorn. And that's why we also got stopped out on that long on Oh, by the way, watch DXY. DXY just, I think I just, yeah, we were popping up here. So that is scary for longs on NQ. Going back to what I was saying. That's why we got stopped out there on NQ, right? Because we dipped a little bit lower than we were expecting. Since ES had that breaker, the unicorn setup, this is not expected. But then if we take a look at the 15-minute chart here, sell side liquidity from a session. So remember I was talking about the sessions last week. This is what you want to have annotated. It doesn't look like we're purging anything. It just looks like we're dipping into nothingness. And we're filling a gap in premium still, right? Still in premium. Or we're taking out London low, or sorry, lunch low from yesterday. That's a substantial liquidity pool you're going to be looking at. Take that out. So you can consider this. It's still internal range, but since we're sweeping out a session range, that's a very strong breaker. What do we see? A closure above the breaker range. So you could use this entire range here. I would use these last two up closing candles as your true breaker. What do you see? It lines up on top of it, a fair value gap right here. And then perfectly, this is what you want to see. We close above it. I told you this is the old buying. You don't want to see a candle body preferred that closes below that, or within the breaker, even below that premium end. Form the fair value gap, we wick into it. This is the reaction you want to see, an expansion up towards the buy side liquidity target. That's a perfect breaker and a perfect unicorn setup. And if we go back to ES now, you can see how sloppy this one was. Same kind of setup. Breaker, close above. That's the old buying. We dip lower, and it fails, you know, to respect that breaker. So that would be something like this, where if you're going long here, I would put the stop. You could have aggressively put the stop at the low end of the breaker, but even right here, we have a gap, order block, breaker that all should hold price as we move up into the buy side. So hopefully that makes sense. You can see ES is still also holding this gap for the most part. Take a look at DXY. We're trading up here on DXY. So not inversely correlated anymore, means low probability 1050 macro. I don't care if we continue to trade up higher. I'm not going to be participating in it. That's already 2 trades today, so that's my line in the sand. DXY trading up. So watch. I also told you that when you see that 930 Judas swing, I think it's also in the 1030 macro. Look at I sent this 2 days ago on Sunday night. 1030 macro, that little subsection in Q&A. Click on that, and if you read the most recent post, if 930 takes stops, the opening range model has a high chance to continue its current direction after a slight retracement. If range is extended, expect a return to equilibrium, even a 9:30 to 10 o'clock run on stops. Isn't that exactly what we got here, right? We have a run on stops on ES. Run on stops. I told you we're not expected to return back into this range, even though we formed the relative equal lows. I was watching it, but what's this say again? High chance to continue in its current direction after a slight retracement. Low to high. Actually, we'll go like this. So it's the proper colors. Low to high. I can remove this 15-minute retracement. So retracement stage of delivery, the full definition of a retracement stage is a return into discount or premium. Retracement doesn't mean a leg. The full definition is a retracement into discount in this case, if we're bullish, premium if we're bearish. So retracement at 10:30 within the macro time, expansion back up. We saw the old buying respected, and then we entered. I don't even know where I entered long. Oh, as soon as we saw that old buying respected, boom. So it's not even like I'm entering off a PD array here, right? Like people are gonna wonder why did Flux, why did you enter right here? There's nothing we're tapping into. Why didn't you enter down here? First of all, I wanted to see if we're gonna respect this discount end. And then second of all, once I saw this up closing candle here, and we saw that 15-minute unicorn, you have enough context where I'd be comfortable just entering marketing. And like, you normally don't see me put limit orders. I don't really like using limit orders that much, just compared to marketing in, because I like to, obviously it does the same thing, but I just like to watch the price action, watch the narrative, and then watch our market profile. If the market profile makes sense, I'm perfectly fine with missing a perfect entry and just marketing in quickly, because we're expecting price to go a certain way because of what it's doing. So I'm not entering off a PD array here. Obviously, there's going to be some PD array that aligns with it. So we have the 1 minute breaker right here. This tiny, tiny, tiny 1 minute breaker. Not breakaway, breaker. Entered off that, I guess. And then we flew up from there into the buy side. You can see we're kind of chopping around here. So that's why it's good to take profit at those highs. And yeah, for 1050 macro, we're not expecting a whole lot. We already got our opening range model we're looking for. And if DXY continues, yeah, like DXY is pumping up here, and we're not seeing any downside movement. So that becomes low probability for the indices. So if you want to learn more about this stuff, please go watch the backtesting video from yesterday. This backtesting true open and market profiles. I'll send it to the chat so you can see this one right here. It goes a little bit more in depth, and there's different examples as well. It's about an hour long. You probably could speed it up to like 1.5 or 1.25. I'm sure I talk pretty slow, but that's why this kind of framework is important. Like if you look at yesterday, this makes sense, right? We got a Judas swing, we got continuation, and we got another entry here. Like framework wise, it makes sense because we're seeing different time elements play out how they were supposed to, and we've predicted these before. But then if you look at yesterday, obviously, a retail Rick will see this as a perfect day for just buying. For us, it's a little bit harder because we don't see a Judas swing, don't see a retracement at 1030. We don't see 1050 really create anything after that. And it just slow grinds up. And then right at 12 o'clock, if you look here, price action becomes sloppy after that, right? Like it's very, very range bound, slow grind up. If you look at DXY at that same time, so remember indices are moving up slowly. If you look at DXY yesterday, that's Monday, January 8th. Here's 12 o'clock as well. And we're trading up. So indices and DXY after 12 were not inversely correlated, meaning if one's going up, the other one has to go down. This here is exactly what we saw in NQ, right? So this is why we had low probability session following 12 p.m. That's why right now, when I'm telling you that DXY pumping up here and indices kind of just trading up and no movement down becomes low probability. So you can avoid something like trading this mess where it's like we're moving 2 points per candle, 10 points per candle, back and forth, back and forth, back and forth, slowly moving up. Right, really no algorithmic signature in here that's really that tradable. Obviously, we do see fair value gaps form, but this is extremely more difficult than it should be. You're just making it more difficult if you're trying to trade this kind of stuff. So that's why DXY is important. Make sure to keep that on your watch list. If you had to look at 3, NQ, ES, and DXY are the most important. YM also is important, but most times if we're going to be using SMT, it's going to be between these two, the strongest SMT. If both NQ, the only time you would really use YM as SMT is if these two are both, doing the same thing, and YM is doing something completely different, then I would be using that as SMT. But if like all three are different, or all three are kind of the same, and the SMT forms between these two, I'm going to be watching ES and NQ instead of YM. DXY is always going to be something I'm going to be watching. That is like a very important thing. So if you have a clean setup forming and DXY is not doing what it's supposed to doing, that alone is enough for me, at least, to not take a trade. That being said, if DXY is pumping up like this and we don't see indices willing to move lower, right? Because they're inversely correlated. Don't see them willing to move lower. As soon as DXY wants to flip, as soon as I say that, it flips red. As soon as DXY wants to flip, think about all that pressure that was building up on the indices. So when DXY dumps off here, even back into this fair value gap, you're going to see NQ fly quickly. So look at that as SMT divergence too. So SMT kind of building up here, where we don't see any movement lower. And as soon as DXY retraces, either into their range or hunts sell stops, NQ and ES, all the indices will aggressively run for their buy stops. That applies to the flip side too. So if you saw DXY trading super low, indices not willing to go higher, as soon as DXY flips high, indices are going to plunge lower. So that's something you can be looking for, especially in the AM session, and relative to when we have 10 AM news. So 1050 macro, do you see anything in here? No, right? So I'm not going to be looking at this, even if it plays out, we're up to the sibi, even run up to the RTH gap full high. I'm not going to be trading the rest of the day. Not going to be looking at PM session. I think we'll do it there. 2 trades, 1 win, 1 loss, still net profit on the day. You're just looking at 1 contract, right? So, and tons of useful study material in all of today. So once the 1050 macro plays out, I'll send a screenshot to the macro view section and we can study that. I'll send actually a picture of both NQ and ES because I think it's worth studying. So if you have any questions or comments, if you want backtesting data, shoot me a DM. I'll be more than happy to help you. Great stream today, I think, even despite the stop loss being hit and just rough price action in the first 30 minutes. I think it's still a great stream. I'll post it probably the next couple hours once it's done rendering. I appreciate all you guys joining. Have a great rest of your day, and I will see you guys tomorrow morning for the stream. Peace. Thank you.